Hey, what's up? We're back again with another video. It's your favorite trader and mentor here, Yamin from SwingTradeFX. And today's video is going to be special because this is the video that a lot of you guys request from me all the time, which shows and proves that I listen and I read all your texts and emails that you send to me. And today's video, we're going to be using the multi-timeframe analysis to break down the market into its simplest form. And we're going to be obtaining a high probability trade from the market. I can tell you not a lot of people can do this. It just proves that we don't just talk the talk, we walk the walk. And this I get to share with all my students week in, week out in my private trading lounge called the War Room, where I show my process. I teach them about the psychology behind the trade, and we see the result of that trade. And it's the best of both worlds, where you get to learn about the mechanics unfiltered, and you get to see the result, how you get to take profit and get to review the trade with me. Literally, you're trading live with me. I'm bringing you into my experience. And the good news I get to share today is, unlike what it used to be for thousands of you guys that make inquiries about joining my War Room, which have been denied access, we have officially opened the War Room not just only to our students, but you guys. So you get to now be a part of this, our growing community, where you get to be actively mentored. You get to actively trade live with me. We discuss the process. Literally what we're about to do now is what you're going to experience week in, week out. So with that being said, if you know that this channel has been really helpful for you, I want you to share this with a friend, at least 5 people, and subscribe, and make sure you turn on the notifications so you don't get to miss the premium content we share on this channel. This is the only channel you get to actually get a true education simplified about Forex. Again, our goal is to make Forex the simplest form of endeavor you can get into. So with that being said, let's get into the video for today. Let's go. So yeah, as you all know, we literally just deal with GBP, JPY, and a lot of you guys ask me why GBP, JPY. It's very simple. There are so many assets that you can trade, and while our strategy is universal, while the way we see the market is universal, I love the GBP, JPY. One, because of the momentum. Second, because of the timing of its movement. And third, because it's just super liquid and trendy, right? And you know what that means? A trendy market means a market that provides opportunity, provided that you have the right knowledge and the approach to actually spot this opportunity. So let's get into the market and see what the market has to offer us. So the first thing what you want to do when you want to analyze the market is to first look to the higher time frame to kind of get a brief understanding of what the market is doing, right? And for me, you kind of want to see the monthly time frame, you kind of want to see the weekly time frame, and you want to be able to interpret it right on the daily time frame. So what am I seeing right now? What I can see right here is that the market has been moving on a low, on a higher low, and the trend has been very bullish. And I can see again that we have a new higher low right here where the market has been moving. So we have different levels right here. We have this level where the market has been moving right at this spot right here. And again, we have another level where the market has been rejecting in recent time. And if you have been in my free Telegram channel, you will see that I said about 2 weeks ago or 3 weeks ago that the market is going to hit the 194 level, right? And look at the market, literally a lot of people were selling, but we know that the market was just going to hit this level, and the market literally just hit this level. So how did we know this? We know this because we understand the mechanics of the market, and we understand the way the market moves, right? So now that the market has hit this level, and myself, folks in my free Telegram channel actually banked profit off this trade. And for you guys that are watching this video, perhaps you're new to this channel, or perhaps you've been watching us for some time, click on the link in the description below to join my free Telegram channel, where you get to watch me drop some of this trade live, and I talk about them and I give updates about them. And for folks that wants to join the war room as well, the war room link is in the description. You can click on the link to join me, where I actively trade live. You're gonna watch everything unfiltered, right? You're gonna see us break the market down. Why is the market moving the way it moves? So not just only you getting results, not just only you making money, but you want to be able to understand, why did I make this money, and how can I replicate this, over and over? Okay, so click in the link below to join my free Telegram channel, to join the thousands of other traders who are actually making the most of my free content and more exclusive content that I drop on my free Telegram channel and the war room channel. So with that being said, now that the market has hit this level, right, I can actually see that the market has been rejecting this, right? And now the market rejected this, and this is the most recent level where the market has found its injection. Now, it seemed to me, and it is very clear to me, that the market is now moving towards the 198 area, because the bullish injection into the market has proven to be very, very strong. Look at it right here. Look at it right here, and it's not far-fetched. Why? Because what the market has been doing has just literally been the market rejecting this trend line, and not just this trend line, but areas of support, very strong areas of support. So it's not far-fetched that we have what the market is doing. So what is the next thing that we want to do? I want to go to the lower time frame and identify key levels where I can see that the market is going to near term. So this is a very simple analysis to do, okay? So what are the key levels that I can see that the market is going to? So we have different key levels. First of all, we have this level where the market started to reject from. And what do I mean by started to reject from? When you look at the way the market was moving, the market actually moved to this top, and you can see a change of structure right here, and the market started to give us a push to the downside. Now, what does the market do? The market has picked up the momentum right now, and the market may be going to that level. So that is a very critical level that we might be looking to actually target. So now that we have that level, do we have another very strong level around that spot? Yes, we have another level right here internally. So initially the market could reach this level and give us a reaction. So the goal is that if we're going to buy this trade, we are going to be looking forward to the market going up to this level, right? So now, one thing we've done very instantly is we kind of know where the market is going to. So how do we get to join the trade? Now, this is where I want you guys to understand something. It's not just enough to know where the market is going to. If you do not know the right point to enter into the market, you're still going to make a loss. Or perhaps if you even know the right point to enter the market and you don't know when to get out of the market, you're still going to make a loss. So for some people, they are very good at knowing where the market, the trend is going, but they can't join the trade because why? They got it at the wrong spot, the market hit them out, and the market starts to move. So it's very important for you to not only know where the market is going, having a projection of the market, but you need to be able to actually have the skill to be able to know the right time to get into the market, okay? So you're gonna see us do that in a few minutes, right? So now, what do we have? So after the markets rejected this level, do you see that we start to have different level of injection, and we held the market through, all of this retracement? Why? Because we're just confident that the market is going up, right? And this is the beauty of having the knowledge. For people who have this knowledge gap where they kind of are not sure about it, a lot of people will have panicked why we were buying this and we're having this deep retracement, right? But the market did what it needed to do for it to get to where it needs to get to. So now I can see that the market has been rejecting on a higher low, and this is the most significant higher low. So how do I get to know where the market is going to? How do I know that this higher low right here is a very strong and is a very reliable higher low that I can buy the market from? Now, you do not actually get to just take your trade from just anywhere and just wanting to enter into the trade. You have to be able to work with certain information. So for me to know what is going on, I need to see since the moment the market started to reject and touch of this trend line, the market has been going on higher high, higher low, higher high, higher low. Then we have a smaller higher low right here, and the market has pushed to the upside. So I can see that the market is giving us some sort of retracement for a continuation of push. So I need to be able to find key point of interest that could actually help my buyers and give me more confidence that the market is making a move to the upside. And there's nothing I could see right there. So drum roll, what do you think I'm seeing right here? Drum roll, drum roll, drum roll, drum roll. What do you think I see right here? Well, let me save you guys the stress. What I can see right here is that the market is now moving towards the previous area of resistance that got broken right here, turning into a support. So what do? It's very simple. We identify this level out. Now, for a lot of you guys that are wondering, how did we do it, right? A lot of you guys are used to so many textbook example of previous area of resistance, turn support. A lot of you guys are used to, something like this more, right? There's something like this that you guys are used to, and if it's not like this, you can't see it. Well, that is why I made my full freedom course for you, right? I show different variation on which support and resistance exist in the real market, right? And I explain that 100% so that you guys can understand. So in the case of this, right, which is something I really pointed out significantly in my freedom course, for you guys to access my freedom, you can go to www.SwingTradeFXacademy.com. You can see it being displayed right here on the screen, and you can click on the link below to have access to it. Okay, and the kind of variation that you guys can see in this one is the market hitting that level, right, breaking that level, and even disrespecting that level, only for the market to make a further push to the upside and test it. This is the second variation of break of resistance turn support I explained in the course, and it's very important for guys who have taken the course that watching this. You know exactly why I put it right there. Okay, so let's get back into it, and you can see it exactly the way the market actually opened that. Look at it, right? So let me bring it up, down again. We have this higher high, higher low, higher high, higher low. You can see the break and just violation of that level. Now, a lot of people would think the market is going only for the market to come back right here to rest. So we now have a previous area of resistance, the violated break, and now we have the area of support. Now, that is a very big signal for us where we think the market is going to make it a move to the upside. And another beautiful thing that we can see also is, could we find any other confirmation or confluence that we can see right here? Another very key thing you can see right here is the Fibonacci level, right? You can see that the market is rejecting a very strong Fibonacci level. So not only do we have the previous area resistance to support, we have a very strong confluence of Fibonacci intersecting the area of previous support and resistance. And as you guys know, I think I made a video on support and resistance, and I talked about having confluences with other key point of interest areas in the market. So if you've not gone through my channel, it's time for you to go back again from the beginning and go and watch some of this stuff. A lot of people don't know this. A lot of mentors do not even know this. That's why they don't give it. They wish to give it out, but they actually don't know this. And perhaps some people will charge you thousands and thousands of dollars. I released it for free. However, if you want advanced strategies, you can go to our website, which the link is in the description, to actually purchase our course. Or perhaps you want to come into the war room and you want to see me apply this advanced strategy in real time. So now that we have this, we want to move to the 1 hour time frame. So what do we have on the 1 hour time frame? The point of the 1 hour time frame is just to get more details into what the market is doing, right? So from the 1 hour time frame, we can see at what point is the market rejecting. So we can see that the market, while it was moving, like I said again, I called out the 194 level. And this is the 194 level where the market, has targeted right here. right? And the market has hit it. So everything we could see right here was just the market hitting the 194 level, and we have all this exhaustion. So these are all exhaustion, these are all retracement move, and the market is targeting these levels. So the market is going to the 198 level, and I said it, I called out 3 levels for the market. I called out the 194, the 198, and the 209 level. We've hit the first one, so it's time for us to take opportunity of the second one, which is going to be an incredible risk reward. So what do we do right here? It is very simple. Since the injection of the market is right here on the 1 hour area of interest, which we also can see is very, very visible on the 4 hours. The next thing we want to know is, how do we get into this trade? A lot of people have problem with finding trade execution, right? And in this particular execution, I'm going to show you one of the ways in which I find my executions in the market. Again, I tell you this, right? Stop wasting your money, stop blowing your account, get the right education, right? And please, do not use candlestick for your execution. Those confirmations are weak. They are for newbies, they are for basic traders, right? You can't want to be an advanced trader and use all you've read on baby peeps, the candlesticks, to just want to make judgment in the market. It doesn't just work, okay? So now in this case, look at the way I want to enter this trade psychologically, right? Let's go to the 30 minutes time frame real quick. So number one, when the market was retracing, the market was moving on the lower high structure, right? And so far so good, the retracement structure is still in charge. Why? Because this injection of the buyers right here is not enough to send the market up to the 198 level. So what would I wait for? Very simple. I would expect that some sellers are going to come in right here at this level. You can see I don't have to have a very mechanical way of approaching the market. All you have to do is just to go through the psychology of the market and go ahead of the market and see what the market wants to do. So I would expect some buyers to some sellers to come in right at this level, and the job of the sellers is to send the market back down again to this level. So in this case, now we have more buyers who will be entering into the market. So if we have more buyers entering into the market, this is what I call a double exhaustion. When you experience a double exhaustion at the point of interest, it means that the buyers in the market are, in this case, the buyers in the market are actually getting in. So the first phase of buyers got in right here, but they cannot sustain it. So I would expect to see the second phase of buyers, which will be way more impulsive. And once that happens, what am I waiting for? It's pretty simple and straightforward. I would love to see the market coming right here. The seller send it over, the buyers breaks the structure, get a discount right here, and I'm going to be buying directly to the 198 level. So let's go back to the 1 hour time frame. So this is what I'm going to be looking on this trade, and this trade would definitely be a fantastic trade. Okay, we can be targeting about 1:7, 1:8 depending on your entry. So I'm definitely going to be looking at this trade. It's going to be a very profitable trade, actually, with very incredible risk reward. Now, a lot of you guys might be wondering, why did I set my stop loss right here? This is a conversation for another day, but again, I would just like to speak on the fact that when you want to set your stop loss in the market, you want to be sure to set your stop loss at an area where you allow the market to breathe in such a way that the market does not actually take you out before it moves to product. And I see this a lot with a lot of students, right? A lot of people, a lot of aspiring traders, right? You set your stop loss based on peak value. That is not, that's literally gamble, right? You do not set your stop loss based on the number of pips you're willing to, you don't get to decide that. The market condition gets to dictate how you set your stop loss. So in this case for me, when the market hits this level, right, and break this to the upside, meaning I could see a very, mini change in structure, right? When the market offers me a discount, just give me a form of push to the downside. Usually it may not even be the Fibonacci level, but the point is after the first phase of buyers. Now, let me explain to you in psychological terms. The first phase of buyers, I don't trust them. I don't feel they're strong enough to send the market up. If I don't see the second phase of buyer, I'm not confident in this trade. Now, when the second phase of buyer get in, it's going to be impulsive. Now, when they get to break this level right here, they need to rest. Right now, the rest phase is what will bring about this retracement, and I'm always one of the third phase of buyers that get into it. Now you will get more aggressive volume being pumped into the market, and this is what we are going to be looking at. So let's see how this plays out. Like I said, the last trade I sent out was fire. Everyone snatched. This is going to give us one ratio 7.94. It could mean $70, $700, $7,000, $70,000. It all depends on your account size. And I want you guys, after this trade hits, send me your screenshot. Let me know that everyone is winning. And if you want to get stuff like this consistently, go into my free Telegram channel, join the link below. And if you want a much more exclusive experience with me where I get to trade live, I show you my processes and I teach you psychology and do active mentoring, teaching you about this, you should sign up to the war room. And if you want a deep strategies all in one package, you should go for my full freedom course. And thank you guys so much, and I'll see you after this trade plays out. And get me your screenshot, okay guys, get me your screenshot, and like and share this channel. Share with your friends. Don't be stingy, don't be selfish, don't be the only one gaining a lot, right? I've gotten thousands of messages to know that a lot of people are actually changing their trading story from this channel. So don't just be the only one in the party. Share it with your friend. Don't be selfish, and I wish you guys the very best of luck. God bless you.